Ilan, thank you very much for joining us. Welcome to the show.
Yeah, thanks, Dion. Wonderful to be here.
Do you want to start by telling us a little bit about Betashares and the origins of the business?
Yeah, so Betashares is one of Australia's largest exchange-traded fund managers now. The business has been around for about 13 and a half years. We really consider ourselves more than an ETF player these days, and I can describe what ETFs are for those that may not know what they are, and more of a financial services company, but we do specialize and have been born on ETFs or exchange-traded funds. We run exactly 95 of those at the moment on the ASX, so we're the largest provider by number of product. We've got about $40 billion, which we're investing on behalf of around about 1 million Australian investors. So yeah, it's been a great journey to build that. And the reason why I say that we're not just an ETF manager anymore is because we're currently executing on a growth strategy to build a range of direct-to-consumer financial services, products and services. So including our Betashares Direct product, which is a self-directed retail investment platform, and in the future, entry into superannuation. So as to your question about the foundation story, so in terms of the origins of the business, as I said, it's 13 and a half years since we've been in business. It was founded by a number of us who had backgrounds in a variety of areas, but in particular, in some shape or form, professional services in financial services. We saw the opportunity for ETFs reasonably early. There was an existing ETF industry when we decided to go ahead and create this business, but it's fair to say it was very early in its journey. We got together based upon a friendship from university, actually. And when we did, we started looking at a number of opportunities in financial services. I think that the one thing we knew we wanted to do was be in financial services for a variety of reasons, not the least of which is it's one of those industries you can actually build something in where you don't have to necessarily be on a plane every week, which becomes more and more important when you've got young kids like I do. So we knew we wanted to build something in financial services, but it was certainly something that we wanted to do, but we didn't know exactly in what area. So we ended up going down quite a detailed path of thinking about the future of financial services. And for a variety of reasons which we can get into, we ended up launching in an ETF space. It's been a great journey, and I've been involved from the beginning, along with a number of my colleagues.
So the ETF space in that time has grown massively. Do you want to go firstly talk about a little bit what an ETF is so that people sort of know the background to that?
Yeah, I'm sure by now more and more people know it, but ETF stands for Exchange Traded Fund. It is a fund that is traded on the exchange. So that's why it's called Exchange Traded Fund. So the first thing is that it's bought and sold like any share. So it's very easy for somebody to buy and sell it. The second part is that it's actually a fund. So it's not a single security. It's a portfolio of securities which are packaged together as a fund. The most famous and in many ways still by far the largest format of ETFs are index tracking ETFs. And these are products that track an index. The whole concept being the vast majority of people will be better off buying a diversified index rather than stock picking. A simple example would be you want to get exposure to the US technology area and you don't know whether you want to buy Google, Amazon, or Meta, Facebook. So with an ETF, you can buy a fund that gives you exposure to the entire NASDAQ 100 index. And we have one of those funds. And it basically is a fund, you buy and sell like a share, which means there's no minimum investment and you can get in and out at any time. And you get exposure to the entire NASDAQ 100 in a single trade. So that is essentially the simplest way I can describe an ETF. They're typically lower cost. They can be bought and sold on exchange at any time. And they're transparent as well. You get to see exactly what you're buying. So that's what an ETF is.
And so when you've looked at the options around financial services, you know that's the area you want to go into. And financial services encompasses so many areas of business and technology and that type of thing. So that doesn't really narrow things down all that much in many respects. What was it that brought you to ETFs specifically?
We had heard of ETFs because the industry itself is probably 30 years old now. So we had heard of ETFs. We started back in 2009 and launched the first product at the end of 2010. So we'd heard of them, but we kind of dismissed them because the industry was so small in Australia. To give you a sense, when we actually ended up launching the business, there was about $5 billion in the ETF industry, and now we've just crossed 200 billion in the industry. So it was very, very small. The reason why we came back to it and started thinking about it a lot more seriously was really due to a number of changes that took place in the market. And I would say one of the biggest ones was, in fact, the global financial crisis. Some of that happened in 08, 09, which is exactly the time we were thinking about this stuff. The global financial crisis really made people reassess the way they had been investing for many years. And as you know, it was a long-standing bear market. And in that whole period of time, an investor who bought, for example, the S&P 500 index would have done just as badly or just as well, depending which way you look at it, as somebody who had put their money with a traditional active funds management business. People thought to themselves, well, I'm paying high fees to active fund managers for the express purpose of helping protect me from these types of situations. And it didn't actually transpire. And it caused people to be very cynical about investing structures. As you know, the global financial crisis was caused by very complex acronym-driven products like collateralized debt obligations and this type of stuff, CDOs. And it caused a drive towards simplicity of investing, a focus on cost, and a cynicism around the ability for people to outperform the markets in the main. And that's really the perfect environment, given what I've just said, for the growth of the ETF industry. And so we were kind of live to that fact. Even though it's very difficult to sort of start a business in that environment, it's sometimes some of the most fertile time, is a time of tremendous flux and change. And so the global financial crisis and what it caused in the investor sentiment and the minds of people looking to make investment decisions was a key part to it. That was one of the many things that there was a big reason behind it. Yeah.
Did you foresee the massive growth in the flow of funds into those products? If you talk about 5 billion at the time, and now we're talking about 200 billion in Australia alone. Was that what you sort of looked at and thought, yeah, down the track in 10, 15 years, that's where we're going to be? Or is that surprised?
It surprised us how big it's become, but it's still taken a long time. I mean, we've been in the business for now for 13 and a half years. I think the thing that we were backing is not necessarily that the world of active management was going to wither away and die. We were backing that there should be more of a balance in investor portfolios between passive investing and active investing. And there still is a much higher preponderance of active investing in the market than there is passive. And our view is that neither of those are going to go away, but they should become a little bit more balanced over time. So that was the thing we were backing. And we were also backing a number of other things like the general move towards self-directed investors. We backed the fact that was going to become a bigger thing, which it has. Financial advisors as well, they were at the point of our launch still being paid by product manufacturers. There was commissions. We were backing the fact that that was going to be outlawed, and it was. It did get outlawed in 2012, and all of a sudden, products were on a level playing field with each other, not just because of commissions, but because of performance. So we were backing a number of macro trends. And I'm also not going to lie by saying we were also very, very lucky to be able to, in my opinion, almost see the future by looking at what had happened in the US market, which even at the time we had launched had become a reasonably large ETF business. So we had some inspiration from the US market as well.
When you talk about the different funds you've got, and like I say, the standard index-linked ETFs are what sort of everybody knows, but you can also have different types of thematics and a whole range of different things. You're talking about 95 different ETFs available.
Yeah.
What is it that goes into the thought process around whether you create a new ETF when there's something along like the AI theme or a crypto theme? I don't know if you've got any of those, but what are the guardrails that you have in place? Because at the end of the day, there's always going to be investor demand in new things, but you must have to try and balance that around, is this long-term or not? Because if that fund doesn't do well, even though it's nothing to do with you guys as such, if it's a market-based theme, the Betashares XYZ fund that's just been created doesn't do so well, that does reflect on your business and your brand and that type of thing, even though it's investor-driven.
Yeah, having launched, over 100 of these things, we've definitely had to think about that a lot. First and foremost, we view our place in the market as offering investors choice. So the first thing we want to do is make it easier for investors of all shape and size to financially progress and democratize investments where possible. So we first of all look towards giving people the opportunity to build balanced and diversified portfolios, independent of whether it's shares or bonds or cash, currency products. So the first thing we look to is, are there opportunities for people to do this easily? If we can use the ETF to make it much more easy to sort of build something, a building block of a portfolio, that would be quite high up on our priority list. So if you think about the investments of the investors who invest in bonds, buying single bonds, as you know, has very high minimums. Putting them into a passively managed ETF is a really simple way for people to get a nice big bond exposure, for example. Or people who, for example, might want to go short in the market, even though that's a very different type of person. In the old days, the only way to do it was to borrow or to use something like a CFD, which is a complicated product that involves a whole lot of things like margin calls. Putting a short sort of exposure in an ETF actually is a genuine innovation and democratization of a financial product. So that's the first thing, is we do try to continue to come back to the fact that we're giving people choice. Yep. Now, in saying that, in answer to your question, we do need to be aware, if we're going to put a product out there, we want it to be a sustainable, secular trend or theme. Something like the ASX 200 is an easy one, right? That's always going to be the NASDAQ 100. When we start thinking about sectors or thematic exposures, it's definitely top of our mind that this thing is not a fad, but a lasting theme. It doesn't mean that we have to necessarily pick the winner. We need to pick something that lasts. So artificial intelligence and robotics, where we do have a fund, in our opinion, is a bit of a no-brainer. Cybersecurity, we launched Australia's first cybersecurity ETF. Is cybersecurity a secular theme that will continue to grow over time? Well, I think the answer is pretty obviously yes. On the other hand, in the height of COVID, there were a number of ETF managers in the US who launched a work-from-home ETF.
Right. They're the ones that get trickier, right?
In our opinion, yes, there probably is a secular trend towards working from home, but can you really package it up into a true to label investment product? Our view is not. And I suppose that will be the third thing I would say, Dion, which is that it also needs to be able to be true to label. If we put a sticker on something and, for example, it says the Betashares Global Cybersecurity ETF, we want to make sure you really are getting access to the global cybersecurity industry. The Betashares Work From Home ETF, which we have not launched and will not launch, are you really giving people exposure to working from home by investing in Zoom and, whatever the case might be? So, yeah, I think those are some things we think about.
Is this a meaningful theme you want to be attached to? Regardless of results, you're looking through that because the markets will do what they are, and you want to be able to match up that side of things because who knows which way that goes, right? Sometimes.
100%.
But you do want to be able to look at that and go, is this a theme that is going to endure?
Yeah.
Yeah, okay. In terms of the business, you've recently entered into an agreement with a large overseas group. What was the thought process around that, and what can you tell us about that?
Yeah, so if we're here in August, the 1st of August, and a few weeks ago, or approximately a month ago, we announced that we had taken an investment from the Singaporean sovereign wealth fund called Temasek. We've got a very long-term view on this business, even though we've been around for 13 and a half years. We were very keen to align ourselves with investors with equally long-standing views and very, very long timeframes around investing. And to that end, our sovereign fund from a place like Singapore sort of fits the bill really, really well. So it's just an opportunity for us to make sure we have people around us with the same mindset as us, which is for the long-term, patient, long-term capital to go with our long-term points of view. That's really what it was about, and we're really excited to have them on board.
So in terms of some of the metrics around that, I think I read something around their potential to invest up beyond $300 million into the business, and they'll retain a minority stake in Betashares. The objectives of that, in terms of where does that take you next? Can you tell us about that type of?
Yeah, I suppose I've talked a little bit about our history and obviously where we are today. So we've now become a leading player, certainly one of the larger players in this space. The thing that we're focusing on now is making Betashares more than an ETF issuer, a true financial services organization. What that involves is growing beyond the ETFs. And that's really something that I'm personally very involved in. One of the things that we're doing and have actually launched is called Betashares Direct. It's an investment platform which we hope will become the place that self-directed Australians will go to build wealth. So at the moment it's live, available on Apple Store and on the Android, Google Store and on the web. And it's the beginnings of our journey into more of the broad financial services space. In addition, we announced last year that we will be acquiring from Bendigo Bank a superannuation fund. And so we will be entering directly the superannuation industry as Betashares. So as you can see, both of those things are very, very related, but both of those things go beyond provision of ETFs and into the provision of financial products and services. So really, at the end of the day, we're now in a bit of a transformation for the business of turning it from a funds management business into financial brand. And obviously, the capital that we receive there is just part of making sure that we can execute on sort of very long-term goals. We've also been public in saying that we're interested not only in doing that organically, but potentially inorganically via acquisition. So to the extent capital's needed, that's useful there as well. But ultimately, we are now sort of very much diversifying the business beyond the ETFs into this other space, which from my perspective is incredibly exciting. And yeah, I'm personally really excited to be involved into technology again and really put Betashares on the map as a financial brand.
That's a massive opportunity in terms of the financial services space around that. I say advisory, but there's a big gap in the market, obviously, as you well know, around people who want advice and people who can't access it. So that self-directed platform fills a massive need in the market, in my opinion. The superannuation funds in Australia, obviously, that's a massive market as well. And you're already providing all of the stuff that goes into managing money. So it might as well be with super funds as well. I mean, they're both huge opportunities. Does that money also mean, in terms of the money you've raised, make you look at different geographies?
Yeah, I'd say we are interested in leveraging what we've built here into a number of other geographies. We currently have a business in New Zealand.
Yeah.
That's our first geographic expansion, but we're definitely interested in other parts of the world where we can, yeah, sort of bring some of what we've learned over here down under and think about the rest of the world. So yeah, for sure.
Okay. Yep. What about from your own perspective? When you started the business, how many people were there, and how have you gone as a leader and a manager within that business as it's grown?
Yeah, there was only a very small handful of us when the business started. I think it might have been 9 when we actually were live with our first fund. Yeah, it was obviously an incredibly exciting moment for us. It actually took, interestingly enough, about 3 years just to get to that point. So the
Yeah.
business has been around for 13 and a half, but there's probably a 2 or 3 year journey to actually get to that point. You have to get a financial services license and build a small team. I have always personally been involved in growth. So my title is Chief Commercial Officer. I've got a strategy background. I used to be a management consultant at some point in my life. So I've always been interested in growth and strategy. So that's been part of my focus from day one, has really been growth and strategy. For the first 13 years almost, I spent most of my time focusing on the products. So growing the product range and the product strategy that we just spoke about, on the strategy of the business itself, and then of the marketing side of the business, because we haven't spoken about it, but one of the things we, I think, did quite well is we were fairly early on in realizing that in order to build a business like this, we had to be able to talk directly to investors in their own language, because it isn't much of a top-down sort of sales model. It is a lot of a bottom-up sales model. And so marketing was a function that I was running for the first 13 years of the business. We built up, I think, a really best practice leading marketing team for financial services. We put out huge amounts of content and social media activity because, advertising and all the digital stuff, because of this fact that we do have a large part of our customer base who don't have an advisor, and we get to those people via this. There is also a really high quality sales function in our business, which I hadn't been involved in, that was run by another one of my colleagues. And that group is responsible for interacting with institutions and advisors. So that's what I did. But in very recent times, extremely recent times, really in the last 3 months, I have turned my attention to focus on Betashares Direct, this direct platform. I was involved in working on the strategy for that particular opportunity, and now I'm involved in actually executing it and trying to build that into a business in its own right, which obviously underpins a lot of our further growth strategies today. So yeah, it's been a really exciting journey.
What were you best at when you first started? From a leading people, what were you good at then? And what did you have to learn along the way?
Yeah, well, before I get into the leading people part, in terms of what I was best at, I always think about answering this question by reference to Microsoft Office suite. I just think it's such an interesting lens. And the interesting part about my training and my background is that we were always able to do a lot of things quite well. So, for example, I am able to use Microsoft Excel and build those quantitative models and understand numerics. On the other hand, I'm quite good at expressing myself in Word and PowerPoint. So I'll just use the Microsoft Office analogy to sort of say that I think the truth of the matter is I've got a wide range of skills that I'm pretty good at. I'm also pretty good at crunching through a whole lot of stuff at a reasonable pace. I guess a bit of an inherent ability that I feel that I have. To get to leadership, I am very passionate about people. I feel I've always been able to relate to a fairly wide range of personality types, which I think has helped as well. Probably the one thing I would say, if I had to sort of put it down to one thing, it would probably be the 80-20 rule. Being able to get to the crux of the matter quite quickly and try to leave behind the stuff that you don't need to focus on. They sometimes call that the 80-20 rule. That's probably been something I've been quite good at.
I was just listening to a Richard Koch podcast the other day where he spoke exactly about those principles and the background to all of those types of things, which was quite interesting. But that makes complete sense. What about what you weren't so good at?
Yeah, I think what wasn't so good at, well, first of all, I did a degree, obviously, in commerce and a law degree, but I wouldn't call myself a finance expert. So I had to learn a lot about some of the intricacies of financial markets and capital markets, and I'm still not an absolute expert in that, frankly.
But you're a numbers guy, right? So that does come a bit more naturally.
To some extent, I'm a numbers guy, but there's better numbers guys than me, that's for sure. I think what I was worst at, maybe I am still worst at, is getting distracted by all the amazing opportunities and challenges that come our way. And I think what happens from that is the tendency to take on too much. So recently, I've made a really conscious decision to be far more jealous with my time and drop things where there are people that can do things better than me, and really trying to focus on a really tight to-do list I think I'm naturally curious, and that can lead me to, spend too much time on things that I shouldn't. Yeah, that's probably what I've kind of had to focus on the most.
It's really interesting because there's lots of things that you can do within business that are interesting and productive. But the next question becomes, is that the most productive thing for you to do with your time?
100%.
And that takes a little bit of, well, self-reflection as well, because someone said to me today something about, the old quote around give something to someone who's a busy person type of thing. I think, yeah, but who wants to be a busy person? Be a productive person is more important. And so those types of things are really matter, don't they, in terms of understanding yourself and what drives you and when you do those things, because it's easy to be busy and productive, but is that the most productive?
Totally right.
It is a totally separate question.
Totally right.
And as far as the sort of advice that you were given along the way from people, I mean, obviously Australia's your background, so you've probably got a lot of that side of things, and you've got your co-founders in the business. Was there anything that someone said along the way where you just sort of thought, oh, that really rang true for you?
Yeah, I don't know who actually told me this, but the thing that always rings true for me is listen to your gut because nobody else will. I think the biggest mistakes I've made have happened when I felt in my gut a certain way but didn't act on it. And as well as that, the best decisions I've made is where I've had a gut feeling and have gone with it. It's served me really well. So I would say that was a really interesting piece of advice, which I can't recall precisely who told me, but I've definitely tried to live by it. And also just get started and do something. It's the other thing, like surrounding yourself with incredible people who have complementary skill sets, maintain humility and remain curious, try to remain curious and just get out there. Those are some of the things that I can't pinpoint who it was, but along the way I've taken from the ether, so to speak, or from people that I admire that I really, really live by.
Was there an example of something where your gut instinct was, no, don't do that, or it was to do it that really, in hindsight, played out and you thought, oh, I'm really glad I listened to, or vice versa?
Yeah, I think the gut one I had was I was ready to move on and sort of take on some entrepreneurial challenges. I was at a management consulting firm for not a huge length of time, 5.5 years in both New York and Sydney. It was an incredible opportunity. I worked with some amazing people, but I ultimately was not wanting to be a consultant anymore, wanted to actually sort of get out there and do something. And I was out there thinking about what to do. And I was approached by a large, well-known billionaire, essentially, who was looking to build out a team of investors. And I suppose you would call it a family office of sorts, although, it's more of an investment business. And it was so alluring. This person is definitely very much on the front page most days of global media, lives a really great life. And I had all this thoughts in my mind about going onto yachts with this person and just getting this exposure. There's an incredible deal flow and amazing things to do. But in my gut, I knew that I would still ultimately be that person's lackey, for lack of a better word, or that person's staffer. And it would be extremely difficult to make a mark specifically like that. And there was 2 examples of scenarios like that, where the opportunity at a pure job level, particularly at that point where I at that point had no job, was actually really alluring. And it was risk associated with not doing that, because you get good salary and bonus. And of course, you also get the prestige of working with that individual. But ultimately, I spent some time and started work with my existing colleagues and what's led ultimately to Betashares. So that was a gut feeling that I had, and I went with it for sure.
A gut feeling in terms of you really knew what the answer was, right?
Yeah.
The logic might have said something else even, and most people's logic might have said, no, that's a great opportunity, but in your heart, you knew the answer already. Is that kind of what you're getting at?
It is. But they're difficult decisions to make when they're presented to you on a silver platter, and you actually have to say no. They're difficult decisions. It's one example that comes to my mind for sure.
Yeah, that's fantastic. In terms of the business, and you've gone through a long process of getting these funds out there, what was the point at which you looked at it and thought, this is really working? This is going, like, presumably at the start, you had a pretty strong sense that would work, and you've seen it work in different ways in the States and that sort of thing. But when did you look at it and go, we are getting this right?
Yeah, it's a really great question. So as I said, give it probably 2.5 years before we even got to the starting blocks. And at that time, obviously, there was absolutely no income or anything coming in. It was an interesting time. But after we launched the business, it was tough going. ETFs were absolutely, they're still not that well known, but they were even less known back then.
Yeah.
People were slamming the phone down on the sales team. We only had a very small product range, and we were nobodies. We actually were nobodies. At the end of the day, business in the financial services is a game of trust, and we had no trust. So it took us many, many years to actually get to that point that you're mentioning, I think. We launched 2 funds. It was really tough going in the beginning. There were two Australian sector funds. Would have taken us to about a year in. We then started launching a few other funds that were genuinely innovative and first to the market. And slowly but surely, we started seeing those numbers tick up. I think what really, you could almost just say that the moment we knew we were onto something is the moment where we started seeing that activity on the ETFs actually growing. Even though it was modest, it was growing. And it took us 3.5 years to get to the first $1 billion. And it was just the most monumental thing for us to get to $1 billion. Now, I've mentioned before that we're at 40 now. The first billion took us 3.5 years, and probably to get from 39 to 40 might have taken 30 days. So I think it might have been at that 3.5 year mark where we paused, we had a party, and we were still tiny player in the world of financial services. $1 billion is not a lot, but I think that would have been the moment.
Yeah, okay. Because I mean, the rationale would be then at that point is, however hard it was to get to that billion, if you can get $1 billion, you can get another $1 billion. And then from then you're just sort of accumulating billions in a simplistic way of viewing it. But getting to one is significant because then it's a matter of scale and accelerating that pace of growth. But
exactly,
I guess that gives you that belief as well beyond where you can get to that next level of scale, I guess, as well.
Absolutely. Yeah. So I think that would be it. Yeah.
Yeah, right. That's really interesting. What about the sort of people that you look at in business? Have you got any examples of people that whether you admire the way they go about business or their philosophies? Who are some of those people that you sort of look at in business as examples you'd looked at?
Yeah, I mean, I have to admit that I don't really focus on highly famous business people, and I typically gain inspiration from people around me. So the people that inspire me most are the people I work with every day. The growth of some of these people where we started versus where they are today and their personal growth story. So, we've got people who've joined the business as their first or second job, and now they're leading departments and killing it. But if I had to pick one person who is famous and a sort of inspiring kind of business person, it would actually be Frank Lowy. I'm an immigrant and coming to Australia as an immigrant with absolutely nothing. What he managed to achieve with Westfield is just astounding. He's known to be very tough, obviously, but at the same time, he's got a huge sense of family and community. He's very charitable. And I think ultimately he's a guy who will do the right thing. So I have to pick a more local kind of a person who certainly does inspire me. It'd probably be, Frank Lowy.
I mean, that's an excellent example. It doesn't have to be anybody famous. It could just be somebody that you look at and go, that person, the way they go about it is the right way. But he totally fits the bill.
He does. And as I said, in that case, it's most definitely the people around me, the people that I've started as a graduate or close to a graduate are now leading departments for us here at Betashares. It's incredibly inspiring.
In terms of, you've had this recent investment, were there anything along the way that you did in terms of capital raisings, or was it all pretty tightly held from the start?
No, well, we had to raise money in the very beginning because it's an expensive process to can't fund it out of your own pocket to sort of set up an ETF business. It is quite capital intensive. So we ended up in the very early days, we went cap in hand with, a PowerPoint deck. And ultimately, we actually ended up receiving some capital from, I would say, a very aligned and similar business in ETFs, but they were based in Canada. They were probably at that point 2 or 3 years ahead of us in terms of their journey. And they were also independent, like-minded sort of people. So we were able to learn a lot from their journey. And so they were a capital provider in the early days to us. In more recent times, and I'm talking about possibly 3 years ago, 2021, we ended up taking capital from a private equity firm by the name of TA Associates, who are a really long-term thinking private equity firm and also a specialist. One of the things they specialize in is financial services. They own businesses like Russell Investments and others. So those were the two primary capital providers for us, and now Temasek as well.
And each time you've done that, obviously the considerations sound like is very aligned to specific purposes around what you're trying to achieve next from the sounds of the groups you've brought in at different stages.
We try to be as thoughtful as we can because this is a long-term play. We're fortunate enough to be able to think actually in decades. We think about what's the Betashares of 2030 going to be, which we started doing back in 2020. And so that's kind of, we're now executing on the Betashares 2030 vision.
You talk about the vision, you talk about, and obviously you're a strategy person first and foremost. What would be the best strategic decision you've made as part of the business where you look back and go, we got that right? Yeah.
Well, apart from obviously entering a market that's got a very, very strong tailwind behind it. You have to say that is the biggest, that's the biggest thing, because if you've got the industry itself growing at sort of 30% a year, that's a very good start. I would say a number of things I'll go into briefly. We realized that we had to overinvest in sales and marketing. As I mentioned before, it's a boots on the ground type of business. Some of the more well-known funds management businesses, they typically work much more top down. They sort of sell to big groups who then distribute it beyond. We took the view, and it's proven to be very correct, that we had to overinvest in sales and marketing. So we definitely put much more effort into sales and marketing ahead of our time. We brought on board a chief economist, for example, who's become now one of the leading chief economists in Australia, early, before any ETF issuer would even consider having such a thing, because we knew that we'll be able to get our voice out there and educate clients, of both advisor and retail clients on the markets. We invested heavily in the brand, and as I mentioned, the marketing before. But yeah, the part I didn't mention as well is actually the pure sales side. So we actually do have a very large, in fact, we think it's one of the largest sales teams now in the market that are out there selling to the intermediary channel of financial advisors and stockbrokers and institutions. Yep. And I think that was a strong strategic decision. Yeah, and we've made another big one now by going direct to customer. The jury's still out on how that will go, but we hope there will be another good one.
But the demographics and the absence of people servicing a lot of these people is probably makes a lot of sense.
We hope so.
Yeah. A couple of quick ones just to finish off. Ilan, business books that you would recommend that you really like?
Yeah, I absolutely love Poor Charlie's Almanac by Charlie Munger.
Perfect. Yep.
I'm not sure if other guests have mentioned it before. I mean, just in case they haven't, obviously everyone's heard of Warren Buffett, the world's most famous investor, but maybe not as well known as Charlie Munger. He actually passed away, but he was Warren Buffett's business partner for the vast majority of their careers, and just an incredible thinker. So the book isn't a story or a biography. It's a collection of thoughts, speeches and essays that Charlie Munger made, but he's so multidisciplinary in his thinking. So he's deep into economics, psychology, physics, biology, and actually history as well. Yep. And he kind of, in my mind, does two things in that book, which, as I mentioned, can be read piecemeal. It doesn't have to be read as a page turner. He kind of creates a manual for life and for investing. And so for me, the reason why I find it to be such an incredible book is he describes what have now been known as mental models for thinking and ways to make decisions. So they're things that actually now are pretty obvious, but reading them, it really does hit home. So things like first principles thinking. If you've got a decision to make, go back to first principles. How important it is to be moral. The power of compounding, of course, which is relevant to our ETF business. So those sorts of models, I think he talks a lot about the 80-20 rule as well. Those sorts of models, I think, are just so valuable.
And that book is literally sitting on my bedside table at the moment. It's a great book, and it really captures, I think also because of him and Buffett, their ages, they're into their 90s. So when they talk about things, they talk about cycles, or they talk about things that have happened in time. They're going back decades and decades and talking about things that they experience in their lives that just give you there's so much more depth and breadth of context around what they're saying that you can't get from anybody else, just because of their wit and wisdom and the way they deliver it. I mean, one of my favorite and it's almost flippant, but the way someone asked him, I think one of the quotes is, "Can you play the piano?" And his answer was, "Well, I don't know. I haven't tried." Yeah. It's just that sort of summed him up a little bit in terms of the personality, right? Yeah. And what about any particular quotes on life or business that spring to mind?
It's such a trite one, but because I'm also I've got like more than a passing interest in sneakers, I actually say just do it. I think just do it, because just do it, the Nike slogan, it's what it stands for, and because of the sneakers. But I think the key thing that holds people back is inertia and lack of movement. And actually that can be applied to life, health, and business. So 100%. Just doing something is always the best way. Just think about that feeling when you don't want to get out of bed in the morning and go for that run and you actually do it. That's a real Nike example. But at the same time, in business too, just getting out there and do it. The best thing you can do is learn and get started. So yeah, just do it is the one for me.
Yeah, that's perfect. I think that's very apt. And I think often people think things have to be perfect before they start, or get it to, there's no point waiting. Just start with whatever you've got and you'll work it out as you go. But something is better than nothing. Just keep on moving. I think just do it is perfect. Thank you very much, mate. This has been fantastic to hear about the business and your journey. Really fantastic. Can't wait to see what Betashares does in the decades ahead.
Yeah, thanks, Dion. Nice to be here. It was good fun.
Thanks, mate. Thank you.